So the big news, of course, is the Fed and inflation news. So just yesterday or on Wednesday of this week, the FOMC issued their rate decision to increase rates another 75 basis points. That was very much expected. The market's kind of been all over the place this week, and I think it's in positive territory last time I checked this morning, but it just doesn't know how to digest this news quite yet. But the more important piece of data that came out of that meeting is that the Fed has now fully admitted their mistake of saying that inflation was transitory, in indicating that it is anything but transitory, now calling it sticky. So, and they're willing to do anything that they have to do to get that under control. Well, the flip side of this rate coin is that the Fed has actually increased their balance sheet last week by $10 billion. That reducing their balance sheet tends to take money out of the system. So essentially what's happening here is they've got one foot on the gas with not tightening as much as they had said they were going to, letting debt roll off of their balance sheet, and one foot on the brakes by raising interest rates. So the facts are that Americans are feeling this inflation and feeling it very strongly. We've been spending $400 to $600 a month more on spending just on our necessities. So although consumer spending is still holding up pretty good, consumers are shifting their buying habits as they are forced to spend more money on the necessities and less on the discretionary parts of their budget. Groceries, inflation in groceries now is as high as it was in the 70s. So the Consumer Price Index is a measure of the average change over time of regular things that we spend money on, like rent, utilities, car and home purchases, healthcare, food, and gas. And the Fed looks at CPI as a measure of inflation to kind of guide their policy. So for June and July of 22, the national average of CPI was 296. That is a 14% increase from the end of 2020. So yes, we're at 8.3% year over year inflation, but if we go from the end of 2020, which by the way, that's when we started injecting all of that liquidity into the system as COVID relief, we saw inflation start to skyrocket. So the top 20 cities that are experiencing the highest inflation, overall it's 14% up since the end of 2020. But here's the list. Honolulu up 11.7%, Denver, Washington, D.C., Los Angeles, all in the 13 to 14% range. Philly and Chicago, San Diego, also in the 14% range. St. Louis, Minneapolis, Houston, Dallas, Detroit, Baltimore, all in the 15% range. Miami, Seattle, Riverside, all in the 16% range. Phoenix and Tampa up 17% or more. Atlanta and Anchorage up 19%. So what do most of these cities have in common? Democratic leadership. So when will we see the government start to issue inflation checks? Oh, well, it's already happening. Some states, more than a dozen states, are already doing that. Well, Dan always used to say we can't spend our way into prosperity, but it looks like we haven't learned.